Hi, this is Ben, and this is your Belmont Math and Science Center tutor tip. Today we will be going over the LIFO method in determining what our cost of goods sold and our inventory is worth. Previously done a video on the FIFO, first in, first out method, but today in this video we will be going over the last in, first out method. So we will begin with this example problem. So the first thing we're going to do is we're going to log our beginning inventory from January 1. This ending balance here is going to be our summarization of all the inventory amounts that we have that we accumulate throughout the year. Our cost of goods sold we will use for our sales, and our purchases column we will use whenever we buy any units. So to begin, we have 125 units. They cost $10 each, and our total cost will be $1,250. So the next thing that we have to do is we have a purchase on March 22nd. We will log that right here. We have 100 units, $12 per unit, so the price has gone up. We will multiply the two to determine our total cost. That is $1,200. So with this ending balance, we're going to summarize all the different kind of units we have. So the first thing we'll do is we will bring down what our beginning inventory was. There we go. We'll bring down that total too. All right. And then we're going to bring over our purchase amounts. And then we're going to look at what our total inventory is, and we're just going to add our beginning inventory to our purchase inventory. There we go. So we have $2,450 worth of inventory in our inventory at the moment. So that's what we're going to draw from when we have a sale. And so on May 17th, we do have a sale. We're going to put that under cost of goods sold. So we're selling 150 units. So remember, we're doing last in, first out. So last in, first out method, we're going to look at the last thing that we bought, and we're going to use those units before we move on to our transactions that we did previously. So the first thing we're going to look at, so we have our 100 units that we bought, and we have our 125 units from our beginning inventory. Since we're doing last in, first out, we're going to use the 100 units that we just purchased first. So we're going to use 100 units there at $12. We're going to multiply those two together to get our total. And then we're going to say, all right, we need 50 more units. So we've done 100 units already, but we still need 50 more for the sale. So we're going to take 50 units from our beginning inventory. That was $10 per unit. We're going to multiply those two together. We're going to add $500, and then we're going to add the total costs of each group, and that will give us our total cost of goods sold for this sale. So it'll be $1,700. So we're going to need to update our inventory amount. So the first thing we're going to look at is our beginning inventory. So we had 125. But now we just sold 50 of them, so now we only have 75 at $10. Multiply those two, 750. Then we're going to look at this 100 that we purchased most recently. We used up all 100, so we'll have 0. That was $12, and then 0 times 12, it's obviously 0. So our total inventory remaining is $750. All right. So next we have a purchase on July 5th. So we're buying 75 units at $14, which will give us a total of $1,050. So we're going to update our inventory. We have 75. Link that. 75 units from our beginning inventory at 10, and our total is 750. We have 0 from our first purchase. We've used all those up. We can just drag that over. And now we have 75 more that we are just now buying, and that will give us a total inventory, or that will give us 1,050, and when we add those all up together, that will give us a total inventory, I believe, of $1,800. That's right. And now we're going to do our last sale. So our last sale was on October 13th. We are selling 100 units. So remember, last in, first out. So the last thing that we brought in was our purchase on July 5th, our 75 units. So we're going to use those 75 units first. 75 units at $14. And multiply those two together. And that'll give us $1,050. So now we still need 25 units, so we can't use any from our first purchase because we're out. So we'll have to go to our beginning inventory where we still have 75 units, so we're going to use 25 units of those at $10. We're going to multiply those two together, and that'll get us $250. When we add 250 to 1,050, we're going to get $1,300, which is our total cost of goods sold for this purchase, or for this sale, excuse me. So we need to update our inventory again. So we had 75 in our beginning inventory. We used 25 of those. So we are going to update that to 50 left. Our cost is still $10 per unit. When we multiply those two together, we get 500. All right. So we still are at 0 from our first purchase because we didn't do anything to that. And then we had 75 from our second purchase, but we used it all up, so we are at 0 for that as well. So after we do all of this, we can figure out our ending inventory amount, which is 500 plus 0 plus 0, which is obviously 500. So that'll give us our total ending inventory, which is what we were asked at the beginning of the problem. We wanted to figure out what our total ending inventory amount, so how much is the inventory that we have left at the end of the year worth, and that using the LIFO method we say $500. And our total cost of goods sold, we can find that by adding together our two sales. So if we add our 1,700 and our 1,300 together from our two sales, we get $3,000. So that means that it cost us $3,000 to sell all the units that we sold over our period, and in our case it was only two sales. If you guys I hope this video was helpful for all of you guys. If you have any questions, make sure you email your professors, or that you come in and talk with us at the Math and Science Center. We're always happy to help. Thanks for listening.